Hi, this is Tony Daly, Friday afternoon, 5 o'clock, and I am scanning for trades for Monday. And what we're looking at here is, let's go to the chart. Let's take a look at Apple. And Apple has just been kind of acting a little bit erratic since earnings. It's been, here we have a pretty big engulfing pattern right here, but it's been staying within it. And Apple has gets very susceptible to binary events, and I know today they had the sale of their new Air product, and we saw the lines outside of there, but a little bit skeptical. But we're coming into the holiday season, and the Apple stores are always packed, but it's just such a hard trade to figure out logically because it's just so heavily traded and there's so much institutional money behind it. It's just incredible. But the good thing about it is the spreads are so tight for such a large stock that it's wonderful to trade. Now I want you to look at this. Here's at the money. We're at 520, and the at the monies have a spread of 40 cents and 30 cents. 30 cents on the call side, 40 cents on the put side, which is, and this is after markets, so they might have widened a little bit, but there's just so much activity there. Now, I'm going to put up a stock that I used to like to trade, but it's very difficult to trade. Now, here's MasterCard. Now, okay, MasterCard is a little bit more expensive. It's a lot more expensive, but look at how wide these strikes are. 1940 by 2070. So you got $1.30. So given everything that's going on, I would much rather be a trader of Apple. So that being said, let's take a look at Apple here, and I'm looking out in December. And I know, we should have a run up into Christmas like we always do. The market just seems so overextended, but they seem to be buying every dip, and as long as we got the Fed doing what they're doing, I don't think that's going to change any. So if we're taking a look at a 40-point measured move estimate based on one standard deviation going all the way out in December. So if I wanted to sell this, I'm going to do something a little different here. I would be perfectly happy owning Apple at 470. So I am going to sell a put here, and I am going to actually just sell one. And I'm going to sell that, and I'm going to look at that one at about 350, which means if I had the stock put to me, I would own it at 470 minus 350. And on the upside, I'm going to sell an upside call all the way out at about a 20 delta. I'm going to look at about a 20 delta, which has an 81% probability out of the money. And I am going to sell that vertical 10 wide. Okay, and I'll lock that in. So let's take a look at where this puts us. So we have a short strike of 470. We have a short strike on the call side at 560. So 470 and 560. And let's get my little arrow here. And let's put that up at 570. And we're looking at the 460. And these are our points right here. So basically, if we're looking at a 560, 570, and a 460 upside and downside, we are quite wide. So I would be very comfortable putting this on. And if the stock gets put to me, that would be fine, although I could always do an adjustment. But I would be collecting almost $5 on this trade right here. So this is a trade I will definitely look at for Monday. It would be very easy to complete it and just make an iron condor by buying the 460s. And if I were to do that, that would make that would be $2.25 versus $3.50. So I would be collecting $1.25 and $1.45. So I would be collecting $2.70, but I would be covered on both sides as an iron condor. And that's about it. That's my trade. 470 on the ups, 470 put, and the bear call spread 560, 570 on the upside for a total of $4.95 credit. Talk to you on Monday, and let's see what it looks like then.